For years, China has been the world's factory, relying on low manufacturing costs to make goods sold worldwide. More than 20 years of record-breaking growth has propelled China from communism to consumerism. Now the Chinese economy is stalling, and the slowdown is hurting many other economies worldwide. Commodity exporters who've relied on China as a buyer for years are now also struggling. Analysts say a slowdown is inevitable, given how much the Chinese economy has grown in recent years. They say high-speed growth is unsustainable and a reset is needed.
China is indeed in a moment of momentum transferring from old to new. Traditional industries are big in size, while these emerging industries smaller. So even though they are growing fast, emerging industries cannot make up for traditional industries' slowdown. So the overall economy is facing downward pressure.
Slower growth is expected to be the new normal for China. Already, analysts are predicting the economy to cool further this year. And even government measures such as increasing spending and cutting interest rates aren't expected to help much. Chinese government leaders are encouraging everyone to spend more, hoping to shift the economy from export-dependent to a more sustainable, consumer-driven model. Some encouraging data emerged on Tuesday. Retail spending, even though lower than expected, still grew by double digits. And the automotive industry is forecast to grow.
Auto sales growth is lower than GDP growth, but the industry as a whole is doing all right because consumers are willing to upgrade their cars. Car prices are higher with better cars coming onto the market, so the whole market is developing pretty fast.
The government is already undertaking structural reforms, slowly changing from a centrally planned economy to a market-driven one. That will take time. For now, China and the countries that depend on Chinese demand for exports will have to put up with slower Chinese growth. Florence Louis, Al Jazeera, Beijing.